Okay, so welcome back. This is the second teaching on the forex masterclass. Okay, so like I said, I'm going to talk about everything that I have to do about forex. So if you can be patient enough to go through all the videos on my channel, you won't need to pay anybody to understand what the forex market is, because I'm going to be breaking everything down for you. Okay, so this was where we stopped, but I'm just going to drop this now so that we can continue from there. Now let's talk about the forex market. Is a decentralized market, where world currency changed, and I've talked about it, and it is a very liquid market. Now liquid means, when we say something is liquid in terms of finance, we means there is so much money in that, whatever it is we're talking about, and that this amount of money makes it easy for transaction. Okay, let's say for example you want to buy $5,000. Let's say you want to buy $5,000 with your Canadian dollar, right? And they are now telling you that there is no enough money to meet your demand. That means the US dollar that you need is not liquid. Okay, so liquid is when the market is considered liquid when there is enough um, you know um, the enough money to meet the demands of both buyers and sellers. Okay, but in as we proceed, you'll be understanding liquidity very much, but for now just understand it to be that. I don't want to go into the bigger terms for now. We'll proceed. Let's take it step by step. Now, only a tiny percentage of currency transaction happens in the real economy that involves international trade, like tourism and airports and stuff. But the most currency transactions that exist in the, that occur in the global foreign exchange markets are bought and sold for speculative reasons. I talked about speculation before. What I'm trying to say here is, the transaction that you see at airports, at airports now, if you want to go to another country, you go to the airport and you exchange your local currency to the foreign currency. That's the country you're going to, right? And other agencies like that does that. But the amount that is transacted at airport is not even up to 1% of the real place where the real global foreign exchange is happening, and that is the speculative market. Now, speculation means when you invest in something, right, in hope to make profit, and also knowing that you might make a loss. So if you invest in something to make profits with the mind that you know that you can also make a loss, you are a speculator. Okay, so now the speculation market, the forex market, is the biggest speculative market. We have others like the stock exchange, the bonds, the cryptocurrency is also a speculation market. But the biggest of all is the forex market. Okay, so so what you do as a speculator is you buy currency, right? When it is probably, let's say, very small, when it is cheap or low, and you anticipate that it will increase, and then you can sell it off and make your profit, right? It's something that is very simple to understand. It's like saying you you know you're buying something at a very cheap price and selling it at a higher price. It's as simple as that. Now, compared to the $200 billion trading that happens on the New York Stock Exchange, I'm sure you guys should know about New York Stock Exchange, which is the NYSE. The foreign market, that is the foreign exchange we're talking about, that I just explained to you, uh, um, we trade at least 6.6 trillion trading volume per day. Okay, now what is trading volume? I'm just going to give us a raw explanation of volume. Volume is the total amount of transaction, okay, in a particular session or day. In other words, let's say the volume for today is, let's say, $5. That means that's the amount of dollars that you were able to trade today, both expenses and everything. Like, it's like saying you go to the market now. Okay, let's assume you are selling tomatoes, and you go to the market and you started the day with 50 tomatoes, and 50 tomato is supposed to bring in at least 500 naira for you. Let's say dollars, $500. And at the end of the day, you are closing with $200. Now, in between you starting and everything, both what you buy, after you have removed your expenses and everything, you now realize that you had a trading volume of, let's say $250. So that's what volume is all about. So volume is like the quantity traded in a particular session. Okay. So as for the forex market, every day we trade at least 6.6 trillion volume. Can you imagine that? That's huge. I think it should be almost 7 now, but let's just put it at that. Okay, 6.6. So from both buyers and sellers, the both side trading volume at least comes to 6.6 trillion. And the New York Stock Exchange just trade 300 billion. So let's say this big, I'm just going to give a graphic explanation. Let's say this is forex, right? The New York Stock Exchange just trades 200 billion every day. So if we are going to compare that, this is how the New York Stock Exchange is just going to be looking beside the forex market. See how very small that is. Look how very tiny it is. That's why people trade the forex market. Why? Because it gives the opportunity for you to come in out of the 6.6 trillion. You take your own, and you are happy with that. You get the point. It's a very liquid market. Nobody can make 6.6 trillion in a day. Well, it's the record. It's never happened anyway. Get what I'm trying to say? So that's the reason why we trade forex. Now, the we don't even want to talk about the cryptocurrency market. Okay, the cryptocurrency market is something like this. Just something very small. Okay, so let's just leave that out of it. Let's just leave out. But our focus is on the forex market, and that's what we're going to focus on now. This whole 6.6 trillion that's traded on the forex market is not just traded by me and you alone. Okay, in fact, it is the amount that me and you trade as retailers is, let's say, just a very scanty portion. You see, this whole portion here is traded by the big guys, and these big guys are not even much. They are not much. This whole big portion here, you see, this small portion here are traded by retailers like me, like you, like small banks, like little guys. But you see, the whole remaining portion is traded by big time hedge funds, central banks, the big guys. We'll talk about the big guys when we get to their part, but for now, just know that that's it. Okay, so our focus as retailer is that we try our possible best to make our profits, because for people who are in the bigger circle, they control this market. We as traders here, we just kind of follow in their footstep. Okay, so it's these old people here are the ones that is called the smart money. We don't know who they are, but at least we know that the central bank and big hedge funds that trade billions of dollars per day are part of them. Okay, so that's when we get to fundamental analysis, you guys will definitely understand this very well. Okay, but I hope you get what I'm trying to, the kind of picture I'm trying to paint here, that we as retail trader, we don't really matter in this market. We are just here to make money and go. Okay, our decision is not influential. It doesn't make sense. It doesn't it doesn't make one tiny move in the market. It's not seen. Okay, these are the people, the big guys. Those are the ones that their movements are seen in the market. Okay, now let's move on to the next one I was going to talk about. Now, the foreign exchange market, just like every other market, opens and closes. Now, from Monday to Friday, it is open 24/7. But from Friday through to Sunday, it is closed. In other words, the foreign exchange market is only open 24/5. So 24 hours, 5 times a week, Monday to Friday. And we'll be looking deep into, each of the days. Now, the day starts from Auckland, right? That then moves to Sydney. Then from Sydney, it moves to Singapore. From Singapore, it moves to Hong Kong. Then from Hong Kong, it moves to London. And from London, then finally New York, and repeats like that. Now, this you see that I just called the name of different regions or countries. These countries' name that I just called are known as session. Now, the foreign exchange market is divided into sessions. Now, each sessions, right? Each sessions have its own time to open and to close. And let's assume that we have 4 sessions. So when one session opens, before it closes, the next session opens, so that by the time this first session is closing, right, there is no stop in market movement. Just going to use these lines that I've delineated. So let's assume we have 1, 2, 3, 4 sessions, right? These boxes here. So this is Auckland session, which starts the trading day. Auckland, that is AUCKLAND. I don't want to type because I don't want us to waste much time, okay? So Auckland starts, then from Auckland, it moves over to, let's say, Singapore. So before Auckland closes, 1 hour or 2 hours before it's closed, Singapore market opens. So by the time Auckland is closed, Singapore is already trading. So the foreign market is not closed. And the same thing happens this next section, which is the London session. And before the London closes, the New York opens. And then the Asian session again, and like that. So before the New York closes, we repeat this whole process here, repeat again. Okay, so it's like repeat again till on Friday night, when everything stops and the whole market is at rest until Monday, the next week Monday. So that's basically how time in the forex market works. Okay, so in this teachings, I've talked about the size of the market. I've talked about we as retailers and what we'll be doing, and I also talk about session. So each of these things I'm talking and I've been explaining are just introductory. Okay, just to introduce you to the market. We'll be breaking into them in details in the coming videos. That's the reason why so I'll implore you to make sure you follow all the teachings in this masterclass. Okay, so till next time, see you in next class.